Hello, good afternoon. You're watching Closing Trades on ET now, and as the customs go, I'll read out the rates for you at the headline index, but that is not where the interesting bit is. The interesting bit really is in the broader markets right now, and that is where all the action is. Yes, the Nifty is still around that 21,900 mark. It's dipped a little bit lower, but it's the mid cap and the small cap indices which are holding up well. And then there are those pockets which really deserve mention. Case in point being public sector entities. So whether it's the insurance companies, LIC which is at record high level, New India Assurance and GIC which are firing away, or the power companies the likes of SJV and NHPC, the entire action is skewed completely towards public sector entities. Then comes the duo of Paytm and Jio Financial Services, and it's a case of clearly somebody's loss is somebody's gain, or at least the market is factoring that in for now. You have seen Paytm being logged in the lower circuit for third straight session, while it's Jio Financial Services which has managed to gain 14%. A lot of result reactions, but of course top of heap is Tata Motors which has gained almost 7% along with its DVR, while UPL has managed to recoup its losses. It started off tempered, just a 2% cut. It aggravated all the way to a 10% cut, and now it's recovering. In fact, the last time I checked, UPL was down just about 4%. So from the bottom of the day, that has managed to show quite a bit of recovery. So now down about 4%. I think it did go around 9-10% at one point of time, right? Okay, it's still 9%. Fine. Okay, I just saw somewhere it's down. No, I just saw it on my screen that it was down about 4%, so I don't need glasses for that.
So
or maybe
guys,
it was wishful thinking.
Okay, it is down.
So in the futures, it is down 4%.
Actually, you know what? The reason why there is no recovery, Anisha, is that they have guided that the recovery at least two
quarters away.
H2 of FY25, 6-7 months from here.
Yeah.
What can happen between now and 6-7 months? So why touch now? There are names which have much better reasonable visibility on the earnings front in the near term. So why should you go towards UPL? Some other stocks which are gaining right after the results, or I'll say some days after the results, look at how Phoenix Mill is propping up. That one is propping up very smartly in trade in a weak market. In fact, look at how the small cap index is outperforming. You said Nifty is flat, Bank Nifty is in the red, mid cap is up less than 1%, but small cap index, okay, till 5 minutes back it was up 1.5%, it has just cracked. The last hour trade phenomena playing out in the market. So we have Shabani Sarkar on the fundamentals, Nuresh and Kunal on technicals joining us on the show. Kunal, a crack is coming in. Do you see it accelerate in the last hour trade?
Not accelerate, but I think we should be now habitual towards this kind of intraday volatility for the indices. The major reason for that, we were discussing this in the morning, that the Bank Nifty is a huge underperformer, and with one of the major chunk of heavyweight sector from the index not performing or underperforming, would probably have a effect on the index movement. And every time we see the Nifty moving up higher, with the underperformance more prominent of the Bank Nifty and the large cap private sector banking names, I think the movement could see a lot of impediment going upside for the indices. So I think we have to be now coming to a point where these intraday 50 or 100 points move on the index, on the Nifty specifically, I think would probably be a point where traders could look at booking out profits and then look to buy back in case if the index dips down and then goes into a negative territory.
Right, okay, that's the take coming in the Nifty right now. Shibani, hi, afternoon. Want to get you in here. Done with the interim budget, although a late reaction. The markets only picked up momentum on Friday. But just wondering what's going to provide the next set of triggers for the market, because we're already at the fag end of the earnings season now. Yes, sure enough, you've got a lot of, mid and small caps still to go in terms of earnings. It's going to be a status quo MPC policy outcome as well. What next in terms of a cue for the market then?
Hi, good afternoon. So a few key things. One, of course, as you rightly mentioned, that we are in the midst of the earnings season. And the good part is so far, if you look at the earnings trajectory, at a headline level, the earnings have been largely in line with consensus estimates. So if you look at the 36 Nifty companies that have reported numbers, there is about a 19% YOY growth in terms of earnings, which means that estimates for FY24 and 25 as a whole has remained largely unchanged, which bodes well from a market perspective. The second factor for the market to now look forward to is post the vote on account is the budget that will be presented once the elections are out of the way. And the vote on account clearly sets the path for the same. A few key things that the market will watch out for is whether there are any kind of push or policy announcements in terms of bringing the mass consumption or the bottom of the pyramid in terms of demand generation up, the way that we have seen in the case of of the premium or the upper end segment. And the second most important factor for the market is the private capex cycle. As you know that a lot of the heavy lifting so far has been done by public capex, both central and state. And now with capacity utilization levels reaching somewhat above average multiples, we would possibly wait to see whether the next leg of the private capex cycle kicks off. If you look at corporate balance sheet, bank balance sheets, all of that is well in place. And our expectation is that that kicking off could also be a trigger that the market could watch out for from here on.
But one particular stock which deserves mention is Jio Financial. It got listed around 240, 239 or thereabout just months back, and look at how it is gaining almost 12% in trade. Large part of the market actually feels it could be a beneficiary of what's happening in Paytm, because Jio Finance Bank has also been launched, and in general there have been block deals where promoters have been raising stake in JioFin. Nuresh, what do the charts tell you for JioFin? Do you have adequate data now?
So don't have enough data given that the listing period has been small, but stock has crossed that 265 to 270 mark, which was a resistance for the last few weeks, as well as from the time of listing. That is where it got listed at. So clearly momentum shift here, and now it becomes a case where it becomes a buy on dips going forward. So good price and volume action, very large volumes today indicates a lot of participation. So any fade off coming in the next few sessions would actually be a buying opportunity.
Taken. The other pocket which is doing very well is, of course, the public sector entities. Take a look at Coal India, that's sitting at record high level. And then LIC, of course, which has crossed the market capitalization of 6 lakh crore, the 4-digit mark being hit. But what are the triggers which is actually driving this rally on LIC? We have our colleague Somit joining us to talk to us about just that. Hi, Somit.
In fact, if you see, LIC has clearly outperformed its other peers like HDFC Life, ICICI Pru, SBI Life in the last 3 months. LIC share prices are up nearly 66%, while the share prices of all the other pure play insurance companies are down around 3%, 8%. SBI Life is up around 7%. Now, in the last 3 months, if you see, LIC has added nearly 2.6 lakh crore rupees to its market capitalization, which is more than the combined market capitalization of 12 PSU companies like NBCC, Hindustan Copper, Nalco, Cochin Shipyard, Ircon, and many others. So, what were the factors that have actually worked in favor of LIC in the last 3 months? Now, firstly is the strong embedded value growth that we are seeing because of the strong gains in the overall equity markets, and we all know that LIC is heavily invested in the Indian stock market. Apart from that is the hope of growth revival in FY25, given that FY24 base will be on the lower side. Analysts are expecting growth to be upwards of 10% odd. Apart from that, the company is also expanding its product portfolio. Recently, they launched the new non-par savings product offering which guaranteed around 10% returns. Apart from that, today also they launched some index plus products. So increasing number of products is one of the reason. Apart from that, analysts are also expecting a likely step up by the company when it comes to the dividend payout policy. Now, analysts are believing that LIC certainly has the ability to pay higher dividends going forward, given the fact that there has been unrealized gains of close to 3 lakh crore rupees because of the gains that we have seen in the equity markets. Now, because of this, the company's available solvency margins have also shot up, which are still not factored in, and post that if they sell some equity, they might be able to realize some gains and likely distribute it among shareholders going forward. Apart from that, they are also saying that the hit on the fair value of the company because of the changes in surrender value, proposed changes in surrender value, is expected to be on the limited side for LIC specifically. And also recently, government had extended the date of dilution of its stake in LIC till May 2032. So there is no fear of stake dilution coming in from the government side in the near future. And the most important reason was the cheap valuation. Now, if you see November 2023, LIC was the cheapest life insurer. It is still the cheapest life insurer because its 12-month forward valuation currently stands at around 17 times. That's the 12-month forward P we are talking about. And while that of HDFC Life, SBI Life and ICICI Pru is anywhere between 62 to 68 times. And do remember, LIC is also the only pure play insurance stock to trade below its embedded value. It's trading around 0.7 times its FY25 embedded value, while the other life insurance companies are trading anywhere between 1.5. Company's growth rate has been a bit lower than compared to what private players have been reporting off late. And apart from that, the company's operating expenses are also quite sticky in nature and on the bloated side compared to private insurance currently, if you see.
Taken, yes, a lot of triggers, and of course it's visible in the stock price today, though it's of course cooled off from the highs of the day. Talking about cooling off, that's visible across the market. So Nifty itself is now inching towards 21,800. There's a sharp dip when it comes to the banking names. So the bank index is now down 172 points, but the biggest cut is coming in the public sector entities, and a sharp reversal in names like NHPC, Bank of Maharashtra, GIC, New India Assurance. They have taken quite a bit of knock. And even other names like Punjab Sind Bank, etc. will come up for you on the screen. SJVN has also taken a very sharp knock. So a big reversal at play as far as some of these public sector entities are concerned. You can add to that list names like IOB and NLC India, Central Bank, UCO Bank as well. But they're all tumbling away in the trading session. Nuresh, if you can hear me right, is it just profit booking in some of these public sector banking names? And what would you recommend the viewers right now?
So we've seen a massive run across PSU banking space as well as a lot of PSUs. A lot of these stocks are up 20-25% over the last 1 week. So looks like a profit booking case, and one should expect some bit of a consolidation after that. One need not be in a hurry to accumulate. You may get into a range bound move on a lot of these banks. So for example, a PNB which has gone up from 9,500 to 125, 128 could get into a new range of 115. 128. So it could spend some time here. So the viewers wait it out, a sell on rise, but not at nothing else to be done here.
On that note, let's take a very quick break. Yes, some of these stocks are cooling, but the bigger pressure points today have clearly been Bajaj Finance. That's now down almost 3%. There's been UPL, of course, which has been gapped down from the word go and still sitting on over that 10% kind of cut on the futures. Maruti as well has lost quite a fair bit, almost a 2% cut coming in there. There's SBI Life, HDFC Life, Kotak, L&T. The large caps are the ones which are weighing heavy on the markets. We'll take a break, continue tracking markets on the other side.
All right, so the point is that in the last 10 minutes or so, almost everything which is high flying in the market has actually given up, along with Nifty and Bank Nifty, which are already pretty flat. PSE index in particular is giving way. Shibani, which parts of the PSU basket are you not comfortable touching at current levels? We all know the story that there are efficiencies being extracted there. There's a lot of focus coming back, renewed focus of management to cut costs, improve profitability. All of that is fine, but many have run up. Where are the areas where you find things uncomfortable to buy now?
Absolutely. So when we have been evaluating the PSU pack, we are looking at it on a stock by stock or a business by business basis. As you rightly pointed out, the entire segment by itself has run up on the basis of one, the expectation of policy continuity, focus on efficiencies, and valuations which were extremely cheap. But now we've seen that in many pockets, valuations have caught up and possibly have caught up with fundamentals. And therefore, at this point in time, the way we are evaluating the PSU pack is pretty much business to business, seeing whether at this current juncture, the business as well as profitability affords any further room for valuation re-rating from this point in time. If there are PSUs where the PSU run-up has been ahead of fundamentals or has been because of low floating stock, we are avoiding that pack considerably in our portfolios. The second, if you look at the overall space, there are still a few pockets of opportunities which we are evaluating where valuations are still fairly favorable and where we see runway for improvement in profitability. Within the oil and gas segment, there are a few such names that we have been evaluating and which we are still positive on. There are some of the larger public sector banking entities where there is expectation of ROA improvement and hence valuation are still fairly favorable. And the third pack where we continue to be positive within the PSU space is the power utilities pack, where we see runway for growth being significantly high because of the visibility on the capex part. But overall, wherever valuations are uncomfortable or where the run-up has been largely because of factors which are more technical in nature, not supported by fundamentals, we are clearly, being careful and cautious on that space.
Right. Just looking at, what else has been getting quite weak. And can I just want your take on the charts of Bajaj Finance in particular? Because post the numbers, minute bit of pullbacks, yes, but you haven't seen any material move. In fact, now we're struggling sub 6,700.
In fact, the major reason for that weakness is because the stock was underlying or falling below the long-term moving average prior to the results. So I think when the stock had broken past below the 7,250, 300 mark, that was the point when the stock had broken below the 200 DMA. And now I think it's almost 700 to 600 points below the long-term moving averages. So, we've typically seen that when stocks break below the long-term moving averages, there is a prolonged period of downside which happens into the stock prices. And they take a lot of time for, these stocks, they take a lot of time for themselves to recover and get back into an upward trending mood. The concern for Bajaj Finance is not just on the indicator front, but also on the volumes. And the moment the stock had broken below the 200 moving average, that is almost 2 weeks back, the average volumes for the stock had increased up higher by a margin of, I think, 1 to 1.5 or times the average prior to that. So that also indicates that it's not just a minor selling which is happening to the stock price or an inertia downtrend where the stock falls below the long-term moving averages and continues to do it. It's because of some unwinding pressure which is also impacting the stock price trends. So I would believe that the stock would probably tend to underperform. Maybe the sell-off or the intensity of sell-off could get arrested. But I think from now to the next, say, couple of weeks or over the next 1 or 2 months, I would expect the stock to correct by at least another 300 to 500 points.
Okay, there's more downside on Bajaj rather than upside. But the other space I want to discuss with you, Shibani, is hospitality. We were just discussing it with the management of Samhi Hotels as well, how there's a bit of a demand-supply mismatch, how they are looking at expanding their presence as well as profitability by a huge margin. And there is this latest IPO, Park Hotels IPO, which has got fully subscribed within just a few hours of actually opening up. Even the numbers from Indian hotels, etc., were ahead of the already high expectations. Do you still see value or investing opportunity in any of the hospitality names, or do you think they have run up now and it's just best to probably book some profits and churn your portfolio a bit?
Yeah, so the entire thesis where the hospitality segment is concerned in terms of the demand that has been very, very strong, resulting in improvement in ARRs and therefore profitability. That thesis remains fairly intact. As you were alluding to the fact that in terms of demand and supply, the trends are fairly favorable, which can help support pricing as well and therefore add to profitability. However, we believe that at this point in time, one has to be selective in terms of choosing the kind of stocks that you want to own in the sector. The sector has seen a sharp run up over the last year and a half, and therefore valuations are somewhat elevated. And therefore, one has to keep valuations in mind when evaluating the sector fresh at this point in time, even though the runway for both profitability trends as well as demand remains fairly intact.
Great to have you on the show. We'll let you go on that note. Let's get in some trading ideas as well from both Kunal as well as Naresh. Naresh?
So that would be a buy on Tata Steel, which hit a new 52-week high. Gave a breakout, has pulled back a bit right now. So expecting this to see some follow-up action, a good risk reward, would keep a stop loss at 138 and go long on this one.
Kunal, what about your list?
So I'll go with a odd name over here. Metropolis is a stock which is confirming a breakout above the 50-day moving average. Looks attractive and could probably come back to the previous highs of 1700, 1725.
Okay, on that note, we are slipping into a very short break. Don't go anywhere. We'll be right back.
Back with closing trades right here on ET Now. A sharp drop, what looked like we were just about drifting into the red. We're now down a good 100 points actually, and that's quite a bit of topple from the top of the day that you've seen. It's financials once again which are weighing heavy on the markets. Of course, UPL and Bharti ahead of its numbers as well are weighing heavy. Then of course you've got an L&T, Unilever, Infosys as well. Reliance has completely flattened out, as has been the case with HDFC Bank and ITC. But perhaps one reason why Maruti is also under pressure could also be, South Korean auto major Hyundai Motor looking to tap bourses for funds, perhaps. It can be the biggest IPO ever in India, as Hyundai Motors' India arm is planning to list its shares on the markets by Diwali this year, as we understand. Let me take it across to Sumit Chaturvedi, get in more details.
It can be BAP of all IPOs in India. What reports are saying that Hyundai India is going to go to markets by the Diwali this year to raise money by stake sale. valuing the company at $28 billion, and 15 to 20% stake will be raised. Well, that's a big thing coming, and looking at India's booming auto market, where many auto bigwigs, including Maruti Suzuki, Tata Motors, Ashok Leyland, are seeing their record share touching new highs, and that's what is actually attracting others also to come to this market. Hyundai Motors is the latest to come here. Also, sources say that bankers have held talks in Seoul, South Korea, with the company's global management, and that's what they are looking at overall. Looking at the way both companies are doing in India, if you look at the comparison between Maruti, the largest car maker, second largest Hyundai, Maruti's profit only in third quarter was 3,200 crore rupees, while Hyundai's the whole year profit is 4,600 crore rupees. Revenue, both Maruti only for quarter 3 is 33,500, while for Hyundai, the whole annual revenue is just double of it, 60,000 crore rupees. Annual sales, while Maruti sells 2 million cars every year, Hyundai is selling 0.6 million cars. However, Hyundai will need this money for expanding further. It has acquired GM's Talegaon plant, where it's already investing 6,000 crore rupees, and the funds will be needed for development of new SUVs and EVs. So that's the new thing coming from India's auto market and share market.
So Hyundai IPO will clearly flutter a lot of feathers on the street. It is almost comparable in terms of market share in several segments. They have higher market share. For example, the urban SUV segment, Hyundai is the leader out there. Very high, almost same kind of two decade plus of performance in India compared to Maruti. So they have their roots quite deeply entrenched. Devang Mehta is also joining us now. Devang, I'm sure you remember the IPO of Maruti. At that time, people have made massive money since then who stuck around as far as Maruti IPO is concerned. But now there'll be another passenger vehicle stock to track. Do you think, Hyundai IPO will also attract a lot of good quality investors, retail investors also likely make money?
Thanks for having me on the show, Ajay. And yes, I actually precisely remember the times when Maruti got listed. If my memory serves me right, it was somewhere around 2003 when the IPO came at 125 rupees and it got listed at 175 rupees. And today, we all know the story, that the compounding that the stock has offered, the business has offered, it's trading around 10,000 rupees. I think it's more rather than the IPO boom. It's more I can guess the more the vehicle market or the passenger vehicle segment, which has now started to expand, the premiumization, the aspirational Indian coming to the fore, which is now driving this markets more. The per capita consumption of vehicle, if we talk about the discretionary consumption in India or luxury trends now rising, Maruti itself is on record saying that they are selling more SUVs now than the hatchbacks or even the sedans. So yes, you made a point, Ajay, absolutely right, that Hyundai has a market share sort of along with Maruti on a lot of discounts where they sell SUVs like Creta and this urban SUVs which sell very well. Ideally, yes, it's a good time for this type of a company to come into the market. The market size is expanding. The size of the opportunity is huge. Probably, yes, market can digest a bit of more passenger vehicle companies. Maruti has been sort of losing market share to the Hyundais and the Kias and the Hondas of the world a bit. But still, it's a large company. So Mahindra and Mahindra also entering into the SUV segment with a lot of bang and being successful. I think, yes, there's still a market which is to be penetrated. So there's this IPOs which are welcome, and I think retail investors along with HNIs, there will be good appetite if it comes during a good market scenario.
Yeah, interesting. We'll definitely watch out for that IPO. But sticking with autos as a sector, motor insurance is something which is on the radar as well in terms of the cashless system which can come into play the way it was in the health insurance space as well. Let's take it across to my colleague Anurag, who'll join us to talk to us about that. And is that the reason the stocks like New India Assurance and GIC are higher? Would be interesting to track. But quickly, if I can toss to you, Kunal, on the insurance stocks, New India Assurance, GIC, LIC, the public sector insurers at that. Would you recommend a buy on any of the names?
Not really. I think these stocks have run up. The stretch for these stocks is extreme. These stocks are divergent to their long-term moving averages by a margin of 75 to 100%. So, for example, New India Assurance, the 200 DMA is at 150. The stock is trading at 265 approximately. which means a divergence of almost 70-75% with respect to its long-term moving average. And same is the case with GIC Insurance. That stock, the 200 DM is at 230, and the stock I think made a high of 430 approximately, which means a divergence of almost 85-90% for the stock. So these are exaggerated kind of levels for stock prices. Yes, the momentum is very high into these names, but looking at a fresh trade for these stocks would be a completely skew in terms of risk reward, and I think that's where one needs to avoid. So would wait on for a corrective phase for these stocks to enter into these names, but not at current levels.
In fact, since Anisha did flag off, this particular thing, we at ET Now are picking up from our sources that like 100% cashless treatment for health insurance, insurance companies are planning 100% cashless repair in motor insurance as well. In fact, let me take it across to my colleague Anurag Shah for more on what he's picking up from his sources.
After recent launch of cashless everywhere in health insurance segment, now general insurance industry is preparing for cashless everywhere in motor insurance segment. As per our sources, general insurance companies are planning to launch cashless everywhere in motor insurance segment also, because in recent time loss ratios in own damage segment has increased for general insurance company, and that is a cause of worry for the companies. So to reduce the loss ratios, companies are planning to come up with a cashless in motor insurance segment also. Their aim is to reach 100% cashless in motor insurance also. So presently there are insurance companies are having a tie-up with the garages of OEM companies for repairing of vehicles. But now, as per the plan of insurance companies, there will be a standard repairing rates packages will be there, so which will be commonly shared by the all insurance companies, and through this insurance companies are aiming to reduce the overcharging, or we can say frauds or wrong claims in motor insurance segment. So that plan is in preparation, and insurance companies are planning to launch this because we have seen that motor insurance segment is also second highest segment in general insurance industry with a 32% market share in FY23. Motor insurance business was more than 80,000 crores. So it's a very big segment for general insurance companies, and recently we have seen the own damage losses have gone up for general insurance companies. So to mitigate the losses, companies are planning for cashless everywhere in motor segment. That will be beneficial for policy holders also, because they will be able to get their vehicle repaired across all the garages, and there will be a standard repairing rates among the garages also.
Okay, thanks so much, Anurag, for putting that into perspective. But Demang, what's your view on Paytm right now? What should investors do? Would you recommend any sort of bottom fishing here?
Honestly, never track this stock to be fair, and it will be difficult to give a view, because we don't hold it for any clients, and have never recommended or studied that business, to be fair.
But in the meantime, let's listen in to my colleague Sumita as well, because she's been tracking this story very, very closely. And of course, the founders at Paytm held a town hall with the employees as well. What were the key takeaways? What are they talking about? Let's take it across to Sumita to get more on the story. Hi, Sumita.
Amidst regulatory fire, Paytm's MD and founder Vijay Shekhar Sharma held a town hall recently. Also part of the town hall was senior leadership members. In fact, he addressed all the employees of Paytm and assuaged their concerns regarding the future of the company. Also about whether there will be any company did anything dubious. In fact, he also says that money within Paytm accounts of people is absolutely safe. And again, reiterating that appraisals will indeed happen this year for hardworking and productive employees. He also stated that Paytm will be extremely compliant going forward. Remember, this meeting happens after RBI restricted Paytm Payments Bank Limited from taking deposits or allowing top-ups after February 29th. RBI alleged consistent non-compliance issues as far as transactions are concerned. It also stated that there were several lapses at PPBL, including transactions beyond regulatory limits, which even raised some money laundering concerns as well, which the company has denied, and has even asked the app or the company to stop onboarding new customers with immediate effect. But Paytm has really dismissed these reports, and also the ED reports that ED's investigation is currently on. In an exchange filing, in fact, Vijay Shekhar Sharma stated that In the past, certain merchants and users on our platforms have been subject to inquiries, and on those occasions, we've always cooperated with authorities. And in fact, the company has dismissed that either the CEO or the company, they both are not under investigation by the country's anti-money laundering agency. And in fact, recently, Vijay Shekhar Sharma also tweeted that Paytm will keep working post February 29th as well, because that's the big question that's really looming on everybody's minds.
Yes, it sure is. But what's not been gloomy has been what happened at the Grammys. It was an evening of glitz, glamour, and honoring the best talent in the music world. As the 66th annual Grammy Awards took place, and India clearly shined once again at the center stage. In fact, Indian musicians Shankar Mahadevan and Zakir Hussain's fusion band Shakti bagged the Grammys award for the best global music album. The award was for their latest album, This Moment.
And the fusion band Shakti, featuring none other than John McLaughlin, Zakir Hussain, vocalist Shankar Mahadevan. You also have a lot more in terms of the violinist as well as V. Selva Ganesh. In the acceptance speech, Shankar Mahadevan dedicated the award to India. Zakir Hussain also secured the Best Global Music Performance Grammy this year for his contribution to the album Pashto, along with Bella Fleck and Edgar Meyer, featuring Rakesh Chaurasia as well. Of course, he's the famous flute player from India. While Hussain bagged 3 Grammys in one night, Chaurasia also got 2 awards. So it was clearly India's moment to shine, and not just in music. We have seen it across the board, Aisha. Whether it was Veer Das at Emmys, whether it's the Alcobev industry, we have seen Indri and God knows which all Alcobevs gaining a lot of traction globally. So clearly, India making its mark across all sectors.
Absolutely, no denying that. But in the meantime, what's also been holding out is the fact that our equity markets have also overtaken Hong Kong, right? We're the 3rd largest by way of market cap.
Yes, that's interesting too, but I don't know how long it's going to sustain, because if the kind of tumble that we are seeing in the markets right now, the moment we hit the record high level, we saw a bit of a return, and from there, today as well, it was going, now we're below the mark of 21,800 as well. But Devang, these slips or these, volatility that we are seeing in the market right now could give a lot of buying opportunities in select names as well, especially the stocks which are reacting very negatively to earnings. Has any such name cropped up on your radar?
Yes, it's a very good question. See, ideally at this levels of the market where we have seen such a fast and furious rally, a bit of correction, a bit of consolidation here and there would be great for the health of the markets. So there has to be certain gravity to the proceedings, and stocks can't just go up and up. So that's where I think we are finding a lot of hard that this volatility has sort of come in. It would be unnerving for people. But ideally, what you made a point that whether it's sort of a buying opportunity, it is not everywhere and anywhere, because we have seen the market breadth expanding to crazy levels. Ideally, there are a lot of businesses which probably won't deliver this quarter, but the management commentary has been good. So just an example being IT sector seems to have sort of come out of the woods. There's also a lot of pharma companies, niche pharma companies, just naming a certain like Abbott India came up with good set of numbers. After a long while, the company saw a bit of traction, margin expansion. I think the stock also reacted very well. So there are both ways, right? Some of the banks have not come up with good set of numbers. Some private banks didn't deliver. But that does not mean that this will keep on going for the next 2-3 quarters. So yes, there are buying opportunities across BFSI, across IT, across certain pharma companies, even in capital goods. Just an example being in case L&T came up with great set of numbers, but there was a margin drag because of certain earlier commitments. So there again is an opportunity with a huge order book, with a good execution capability, with capex again going to happen thick and fast. I think these are opportunities in great companies and good companies where there are sort of these corrections entering, and one can probably look forward to enter for another 1.5-2 years.
In fact, Bharti is slated to come out with its numbers later today. So let me take it across to Somit and find out what the street is penciling in.
Well, as per street expectations, Bharti Airtel's numbers on a sequential basis are expected to report a muted set of growth. Revenues are expected to be higher by around 3% on a consolidated basis. EBITDA is expected to be higher by around 2%. EBITDA margins are expected to come in at close to 52.1%, while the net profit would see a sharper jump because of some exceptional items as per the analyst expectations. Now, the India mobile business is the key number which drives Bharti Airtel share prices, and in that front, if you see the India mobile revenues expected to be higher by around 2.6%. 8%. India Mobile EBITDA is expected to be higher by around 3 odd %. Subscriber base is expected to grow to around 34.54 crore, and ARPU number, that's a key number, is expected to be higher by around 2 odd % to close to 206.5 rupees per user per month for Bharti Airtel. Now on a consolidated basis, if you see steady quarter for the India business but a muted quarter for the Africa business, and hence we are seeing lower EBITDA growth of around 1.7%. Now the Africa business accounts for nearly 27% of Bharti Airtel's consolidated operations, and the numbers are expected to be impacted owing to currency devaluation. Apart from that, the India mobile business, if you see, the ARPU growth is largely on the back of more 4G subscriber addition and increasing postpaid penetration in the country. Along with that, the home broadband segment, if you see, that is expected to report a robust set of numbers on the back of strong quarterly net subscriber addition. Healthy growth is expected from the enterprise business, while the DTH business is expected to report a muted set of numbers. Now the key things to watch out for from Bharti Airtel numbers would be their capital expenditure plans for the next financial year, that is FY25, the commentary on mobile tariff hike, any what has been the response to Jio Bharat phones, any market share shifts that they're seeing, and what are the commentary coming in when it comes to 5G monetization, and the emerging trends of the initial 5G rollout would be important to track from Bharti Airtel conference call.
Right, okay, that's the expectation coming in from Bharti, which by the way is going weak into its numbers. It's down a good 2.6% in fact as we speak right now. What continues to hold out though is of course Tata Motors, and the OMCs are going very, very strong. Not just the OMCs, the BPCL for instance is chugging along almost a 5% gain, but look at an ONGC. This has been one of the key star performers of last week, as was the case with Reliance, but Reliance has petered down. OMC's, ONGC still going strong. Devang, you want to get in here? OMC's, ONGC, any of these names you think are a material buy?
Probably the Red Sea crisis saw a lot of these companies doing well, right? So India used to get its normal share of crude imports from Russia as well, and I think the sort of GRMs had expanded, and most of these companies, it immediately gets into the net profit of these companies. Most of these companies started to do very well, like Reliance started it off, and then ONGC and oil in this company sort of started following it up. I guess it's more a move that is medium term in nature. But having said that, this side of the market, for example, Reliance had underperformed for the last 6 months, 1 year time frame. I think it's just come out of that hibernation mode, and most of its businesses, look at the numbers. Most of these numbers were excellent. Be it Jio, be it the retail numbers, be it the O2C business, plus I think also the GRMs. I think most of these businesses are doing well. So my sense is that if the market has legs to go forward from here, these are some of the market leaders which will sort of take the responsibility of taking it to the new level.
Okay, let's see whether they take that responsibility or not. But in the meantime, let's take some BTSC ideas from our chartist. Naresh, you go first.
So first is a buy on Tata Steel, a fresh breakout here, 52-week high as well. Stop loss at 138, target price of 147. Second is a buy on Cipla, a new all-time high, flag breakout, and the whole pharma pack as such is showing relative strength. So Cipla with a stop loss of 14.25 and a target price of 14.80.
What about you, Kunal? What's the BTST or STBT trade you're spotting?
So yeah, one BTST and one STBT trade. First one is a buy on Bharat Forge. That stock is heading towards a swing breakout. It's a very minor range breakout, almost a 40 to 50 point breakout for Bharat Forge, about 1270 levels, which suggests a buy with a target of 1320, stop loss at 1240. And Trent is the other stock which I've been bearish on over the last 1 week. Looks like that the stock is about to make a fresh setup over the last 300 to 400 points.
And I think the earnings are tomorrow, so I don't know if that is some indication as to what the street is expecting, or what should one look at as far as numbers is concerned. But you know what, you don't track Paytm, you said, Devang, but what about Jio Financial Services?
I think yes, it's into the right kind of the business, and probably financialization is one theme that we've been riding high on. It might have phases of sort of small hibernations in between, but the model that Jio Financial is trying to get into, probably even the EMC that will come into picture, and the other line of businesses, all these businesses together, probably India is still underpenetrated, and I think it's going to take the advantage of economies of scale, the reach that this company has. It's extremely, I think, a right moment at the right time for this company to go into this type of businesses. So ideally, yes, I have not looked at the model in detail, but seems like, yes, it's sort of making the right noises as such, and will be in favor for some time to come.
Point taken. So that's as far as Jio Financial Services is concerned. Separately for the market, it's not the best close that we would have imagined when we started off the day, because we were comfortably around 21,900. We were cruising along very, very nicely. But then there was this sudden tumble that we had seen. But Naresh, come in on the charts of Tata Motors, even Coal India for that matter, a couple of these names, what would your recommendation be?
So the recommendation is to keep a trailing stop loss and ride. At these prices, the risk reward is a little tough. Tata Motors post numbers is now back to the stock has hit a new all-time high. It's gone up from last breakout was at 650. Now we're at almost 920, 950. So trailing stop loss below 880, and the stock still looks good. Coal India, on the other hand, could be a time where one should be looking to book profits. The stock has gone up one way in the last 4-5 months from 240 to almost 440 now. So time to take profits in Coal India and ride on Tata Motors.
Let's see what else is happening in the market right now. While OMCs, of course, continue to be in the pole position, there's, of course, Coal India as well. IOC today is the one which is actually leading an 8% move. Coal India, 6.5% higher. SAIL up 6%. There's MCX as well, which has made a dash of about almost 6%. And Tata Motors, of course, has been a solid earnings reaction. That as well continues very, very strong. Incidentally, M&M as well, due to reports its numbers, that's also going very strong. On the other hand, Maruti is not quite. Now, of course, it's not an apple-to-apple comparison, just picking up ad hoc names from within the auto basket. Banks continue to be the weak link. HDFC Bank has done nothing today. In fact, it's just about flattening out right now. The Nifty Bank as well has drifted lower. But today, the index has fallen a lot more than the Nifty Bank. Naresh, what next now for the Nifty Bank?
So we are stuck in a range on the Nifty Bank, say 45,000 roughly and 47,000 on the upside. Till the time we are in this range, no major breakout. And also the 1480. Then you have ICICI Bank stuck at 1,000 to 1,050. That's almost 50% of the index. And then you go further, you have the same case with a Kotak Bank, which is stuck at around 1,800 plus minus 30 points. You have SBI stuck at 600 to 650. So we are stuck in a range for majority of the weights on the Bank Nifty. So unless we see leadership of at least one of these names, then we can see a breakout. Same way, a major breakdown in any of these names could see a breakdown, but we are not very close to either of them. So for now, expecting sideways move in a band of say 1,500 points roughly for the Bank Nifty.
Okay, point taken. But since we're on the subject of bank, Devang, what's your view on the public sector banks at this point of time? I mean, a UCO Bank is up 15%. They're talking about how their asset quality is likely to improve. At least that is what the takeaway from the earnings call was. Punjab Sindh Bank is higher. Central Bank, Bank of Maharashtra, a lot of these regional small PSU banks are perking up. Should one get tempted by this rally in these smaller PSU names or stay away?
See, ideally, I think banks are going through the best times. PSU banks, particularly, the question is on PSU banks. And I think this is a confluence of factors. Very clearly, most of these companies have now improved balance sheet, right? They have a robust balance sheet to not only lend, but I think there is nothing in the pipeline that can immediately come and disturb. Add to it the fiscal deficit number that the government talked about and the lower borrowing figure that they talked about in the interim budget. That also has spooked this side of the PSU banks, where I think most of their gains on the bond side can come on the treasury side. Because we saw the bond yields collapsing on that day, and probably that's a sign towards lower inflation and lower rates over a period, which these banks would be big beneficiary of, not only in the treasury portfolios but overall as well. So I think yes, it's a good time. One need to be just cautious that you can't get into everything that is doing well. But yes, if you are holding these businesses, I think these are the best times you've seen in the last 10, 15 years for PSU Bank. Just keep on holding, and probably at the first point of a collapse, or rather whenever the numbers or the fundamental quality deteriorates, and if you see NPS coming in the near future, for example, a failed monsoon or something like that, that's the first sign one should probably be deterred with. Right now, I think things are good for this PSU banks, and they've come out of a multi-year bear run. So I think yes, for the next 6 months, 1 year, it looks good for this sector.
Right. Okay, let's begin winding up for the day. Devang, good to have you on the show. 21,968 is where we're shutting shop for the Nifty futures. 21,797 I stand corrected, and that's a downtick of about 150 points that we have seen in trade. In the meantime, of course, the weaklings today have been UPL, which is, by the way, closed in at a 12% cut on the futures, no less. Bajaj Finance, which lost about almost 3.6%. Bharti, over 3%. Bajaj Auto, Maruti, HCL Technologies, L&T. The list of losers has been endless as well. In fact, even SBI has settled in at the session lows, right, Anisha? 1% cut.
Oh, well, yes, and even Airtel, for that matter, is going home with at the lowest point of the trading session, perhaps factoring in some weakness in the earnings as well. Britannia, of course, comes out with earnings tomorrow, so let's see how that one is faring. Paytm was, of course, down and out throughout the trading session. There was a large deal that happened at start, but not big enough to break that circuit of 10%. So we see that slide continuing. On the other hand, Jio Financial Services gained as much as 15%. For a large part of the trading session, it was all about public sector entities. So a UCO Bank, a New India Assurance, a GIC, a Punjab Sind Bank. These were the high flyers in the trading session today, while UPL clearly was the one stock which was down and out throughout the day, a cut of almost 11%. In terms of the other big movers, need to watch out for, of course, the oil marketing companies, as we pointed out. Phoenix Mills was the other one with a 7% gain. Mahindra Lifespace was also a result reaction, 7% gain there. TB Realty, SAIL, Tata Motors, Aegis Logistics. These were some of the other names that we were tracking. But overall, it was a weak day for the bulls. The Nifty ended in the red, and so did the advance decline ratio. And the India VIX spiked quite a bit ahead of that RBI MPC meeting, which will start tomorrow. But with that, it's a wrap on this edition of Closing Trades. Thanks so much for being with us.